session on business planning and competitiveness. So when we're thinking about competitiveness, that's the business's ability to offer better value than its rivals. It could be through lower prices, better quality, more innovative or improved customer service. And that will allow you to attract, but also retain your customers. Now, business planning links to competitiveness because if you do business planning, that will help you become more competitive. And that could help you achieve your objective, whether that's survival, profitability, or growing your market share. Now, we'll talk about the middle bit here in terms of business planning. Why does business planning help you become more competitive? Well, it allows you to identify your strengths, identify your weaknesses, also opportunities and threats. But in terms of strengths and weaknesses, that could be working out your quality, your price, your customer service, how you could improve by going through your business and doing a plan. Number two is that it will force you to do market research, a key component of business plans and business planning. That will allow you to look at primary information, secondary information, quantitative information, qualitative information, and look at your customers, look at your competition, see trends in the market, spot and identify opportunities. And number three is that it will allow you to manage your resources better. What I mean by resources is if you do a business plan, you can look at the time spent, the finance, the money spent, your employees, what they're doing, are they in the right place? So planning is critical for competitiveness. Number four is you could set clear goals because you've done a plan, you now know what your goal is, you know what your target is, you know what your objectives are, and that will directly link to how you can stay ahead of your rivals, which is essentially competitiveness. Now, the next thing to think about is examples of this in play. So all of these examples will be the example, the situation, how a business plan was used, the outcome, the findings of that, and how it relates to competitiveness. So how business planning links to competitiveness. We've gone through different types of business ownership styles here. So number one is a sole trader. It's a new coffee shop. The situation is a town has many chains already, chains of cafes. And then the business plan, well, there might be a gap. You do your business planning, you do some market research, you see there's a gap for mobile options, maybe near business parks. That will allow you, the finding is you realise convenience and speed is the key here. You do that and then it increases your competitiveness as you're offering a better customer service. Your customers will be happy that you're flexible, you're in that business park and you can perhaps deliver coffee to workers in that business park or shoppers in that business park. Number two is you're a private limited company, an LTD. You're an existing gym in a market. Your situation is a national gym opens nearby. And then you could be thinking about your business plan where you assess the threat of the new national chain that's landed in your local area. And then you can work out how you're going to retain your customers. Now, you do your business plan, your findings will be maybe you need to move into personalised training, maybe you need to have more of a community focus because you're a local gymnasium as opposed to the national chain, and that will allow you to increase your competitiveness because you're offering a better localised quality. Now, the third example here is you're a public limited company, a PLC, and then you are a national supermarket. The national supermarket, the situation faced here is higher pressure from discount stores and from online grocery stores. So you do your business planning and you realise that you need to review your market trends. You review market trends, you look at your market data, market research, you realise the findings, the outcomes are you need to invest in automated delivery, you need to look at price matching schemes and maybe loyalty cards. How that links to competitiveness is it will increase competitiveness because of lower prices and because of higher quality from doing all of this. Now, the next thing to think about is the risks of poor planning and how that will impact competitiveness. So the risk of poor or no business planning and its impact on competitiveness will be as follows. Well, number one is probably missed market opportunities. If you did poor or you did absolutely no market research, you might set the wrong price, you might launch in the wrong location, you might create the wrong product, and rivals are likely to better meet your customers' needs. And so that's a loss of sales for you. Number two is weak financial control. Maybe you did poor financial planning, probably will lead to cash flow issues, running out of cash. It might mean because you run out of cash, you're unable to invest or promote, or even worst case scenario, continue as a business. That will mean competitors will likely squeeze you out of the market. If they realise this, maybe they'll set lower prices so you can't sustain that period, maybe they'll promote more so you can't compete. A problem for you. Number 3 is poor differentiation. Well, here, if you fail to work out like how you're going to compete in the market, why your business is different, then you probably won't have a USP, a unique selling point. And that's going to mean you're going to get lost in the crowd. And if you get lost in the crowd, diluted in the market of competitiveness, you don't stand out, well, that's probably going to mean that you fail to retain your customers. I hope that helps. I'll see you at the next sesh.